Okay, the RBI produced a recommendation report over the weekend which has got the financial sector quite upbeat and very much in focus. Now, stocks like Bajaj Finance and Finserv, which have just run up tremendously because it seems that one of the key developments from these recommendations was that if you are a large enough, well-run NBFC, I believe with an asset size of above 500 billion rupees, you may now just qualify for a banking license. For a lot of larger NBFCs who are struggling to get funds in order to grow and borrowing from insurance companies and other mediums, this now becomes a great way to source low-cost deposits and obviously grow your financing business. So after this happened, there's been a bunch of other changes as well, like the promoter holding for banks has been once again, they're exploring a 26% versus the 15% which was earlier proposed. And there's a whole host of other smaller changes as well. But what we're talking about right now is really how the brokerages are viewing this. So let me just bring you the different house views. CLSA, first up. They say that this is a step in the right direction. However, it is not going to be easily operationalized. So to implement all this is not going to be an easy task in their view. They think that overall the recommendations favor the smaller banks and the smaller SFBs. For larger NBFCs, size-based supervision is recommended, according to CLSA. MACQUARIE says stick to your regular banking thesis by HDFC Bank and ICICI Bank. They're bold recommendations that corporate houses might apply for a banking license. However, the ultimate power for fit and proper criteria does sit with the RBI, so it will be subject to their approval, of course. We then have INVESTEC, which said that this will probably create a lot of consolidation in the banking sector. It will also accelerate the shift away from the weaker banks to the more liquidity-flushed, larger private banks. One thing which they said is particularly positive for IDFC, which is currently on 20% circuit, and Bandhan, is that banks can exit the NOFHC structure now if they so please. And then finally we have MOTILAL saying that it's a very progressive move. Again, it's going to accelerate the market shift away to the more liquidity-flushed, larger private players. And now they're going to see more M&A opportunities as well increasing within the system. So all the brokerages are saying that it's a welcome move. However, there are going to be certain challenges in terms of actually getting all this operationalized. There are some clear beneficiaries and some clear losers. So if you look at the Nifty this morning and you see what the top losers and the top winners are, they both have a mix of financial stocks, right? So on the winning side, you have a IndusInd Bank, a Bajaj Finserv that are doing really well. And then on the losing side, you have an HDFC, which is down 4%. You have an M&M and ICICI, which are down around 2%. So it's a mixed breadth in financials, but an all-important, really groundbreaking recommendation by the RBI that is very likely to change the sector permanently.